As the U.S. session begins, the dollar versus yen is down around minus 0.40%. The pound versus U.S. dollar and euro versus U.S. dollar, a little change. I go through those major currency pairs from a technical perspective in this video, so let's get started. Take a look at the euro versus U.S. dollar on the hourly rally chart. We broke higher in yesterday's trading, breaking above the 100-hour moving average in the process. However, by the close, the price had moved back down toward that moving average and also toward the underside of this broken trend line. In the Asian session, we did move lower following the broken trend line down here, but found support buyers against that level and then started its rotation back to the upside. The move to the upside saw the price extend above the 200-hour moving average. It's the first time since this point right here on September 24th. But as you can see, that momentum faded and the price rotated back to the downside. So we start the day below the 200-hour moving average in the 38.2% retracement, mind you, at the same level of this move to the downside from the high price that we saw after the FOMC rate decision to the low price that we saw just last week. That this dual technical level at 1.1749 will be the key resistance. If we get back above that level, I would think that the buyers would start to push the price higher and look toward the 50% retracement. Second time's a charm. Alternatively, if we can't get above that level like we are right now, the sellers are probably more in control. Not probably, they are. Get below this 1.17259 level, this swing, the low of the swing area, and we'll look back toward the 100-hour moving average and see what can happen. So sellers are trying to take back control below the 200-hour moving average, below the 38.2% retracement. We'll see if they can keep that momentum going in early U.S. trading. We'll take a look at the dollar versus yen next, and this currency pair has been more bearish over the day so far. A couple moving averages were broken right here, the 200-day moving average and the 200-hour moving average. That added more bearishness to the pair, breaking below the 50% retracement of the move since this high, going back to the beginning of August to the low price that we saw in September. That 50% comes in at 148.18, and we are currently below level 147.99. So it will be early resistance in trading, but this is going to be the key level for the dollar versus yen, not only today but going forward, with the two moving averages converged there at the 148.40 level, 49 level, something like that. I think it's 49 level being the key level for the dollar versus yen. So as long as price remains below those levels, the bias remains more to the downside. We can expect rotations back maybe toward the broken 38.2% retracement and these lows and highs, the most recent lows and highs, which formed this 147.45 to 147.54 area, swing area for the dollar versus yen. Finally, let's take a look at the sterling versus U.S. dollar and this currency pair. Similar to what we saw in the euro, initially moved lower. In this case, we found support against its 100-hour moving average. We traded above and below that 100-hour moving average after the move higher in trading yesterday. That move to the upside off of that level did find some resistance as sellers within this swing area. I'll zoom out a little bit to show you the importance of this area going back in time. A number of different, it's not at an extreme. It's in the middle of this, this range right through here. But there's a number of different times where the price bounced or found resistance against this level. Look more recently through here and here and here. And you can go back to here where we bounced off the 100-day moving average as well. And then in trading yesterday, we came into this area once again and found willing sellers, not once but twice. So getting above this area between the 134.45 and 134.67 level is going to be key. Also near the high of that is the 200-hour moving average. Not far away from that is a 100-day moving average. So there's overhead resistance here, but we are currently in between swing area above, 200-hour moving average above, and 100-hour moving average below. 134.14 needs to be broken to increase the bearish price. Have traders looking down toward this level right through here. Finally, let's take a quick look at the Aussie versus U.S. dollar after the Reserve Bank of Australia kept rates unchanged, but it was considered more of a hawkish change. We did see a rotation to the upside. I don't know what this move back to the downside was, but it quickly rebounded back higher after holding Looks like a support right here against these lows from last week's trading. This dip to the downside, so we're seeing a sharp move to the upside. We're above this swing area right through here. We have this swing area up here to aspire toward, which was home to different swing lows and swing highs going back in time through here. That comes between 0.6624 and 0.6635. Currently trading at 0.6606. So staying above the broken 38.2% retracement, staying above the 200-hour moving average keeps the buyer's market control for the Aussie versus US dollar. So there you have a look at that for the major currency pairs. Plus a bonus one, let's take a look at the Aussie versus US dollar after the RBA rate decision. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.